I think everyone's overthinking the play finding a little bit. So let me just show you and explain how easy it is to find the criteria that we're utilizing to bank off of these. Easy, 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 easy plays. Don't overthink it. That's an important part. But other than running the queries, here is another method you can utilize to easily find plays. Type /earnings. You can utilize the earnings calendar to pick plays that have just had earnings, because again, it's dated. So go to the earnings sheet. Now we can just say RSI, AYI. Close, but not quite. RSI, WBA. Ooh, close, but doesn't make the cut. RSI, MU. Ooh, close, but doesn't make the cut. RSI, DNOW. Nope. RSI, TNP. But you get what I'm saying. This is how easy this shit is. Oop, too many calls too fast. But you get what I'm saying. That took what, like 15 seconds to roll through 1, 2, 3, 4, 5, 6 to eliminate from the criteria list. Now, another method is go to the 52-week low list. You see these tickers here? Not those. These. All these tickers here. They just hit 52-week lows today. So now, what we can do, we can go back to our chat here. Monthly options, buddy. So now that we have a 52-week list of stocks that just hit their lows, do the same thing. RSI, SCU. Close, doesn't make the cut. RSI, TEX. Ooh, even closer. RSI, Lab. Nope. RSI, Man. Nope. So this obviously takes a little bit longer, but there is alternate methods of finding plays other than just running the query. But obviously, I mean, the query is 12 for... Ooh, there's one TGB. This one matches. A little bit over 25. So I'm going to keep looking. We have to stay consistent. RSI, PGY. Stupid rate limits. But there's this method, and then I can also do this. Hit the FUD stop command, go to screeners, go to alpha screeners, go to screener 3, core logic, which I don't think there's any point to have 3. I'm going to erase 2 of them. And then we can immediately organize this in RSI. Let's start with Kern, 1949. That's when my dad was born, I think. Kern, boom, and it gapped 2 fucking day. That's what I'm saying. And look, the last time the RSI was down here at these levels, it corrected, and it's going to do the same thing again. And these don't expire until the 15th of July, naturally, because, again, it's a monthly option series. But the problem, and this is why you look at the options chain every time, what's the problem with this picture? The IV is way too high. So unless you want to buy some shares and sell calls, while, you know, it's not worth it at this point, this one is a no-go. So that's why we look at the options chain. The chart looks banger, but the options chain tells another story. Don't play this one, because again, there's nothing in the money on the call side, and I mean that right there is enough for me to not touch it. And the IV, I mean the IV, shit, that's ridiculous. So no, never, no. That's why we look at the options chain. Okay, so next, Dave. I think I've already looked at that one. OPAD, IMBUK. Let's do IMBUK. IMBUK. Embark Technology. Anything in the money? Fuck no, not doing it. Sometimes it's better to start from the options chain. You get through it faster. Maps. Let's go with Maps. Ooh, barely in the money. Now, this is where we analyze volume. Where's it at? Volume seems to be more weighted on the call side. Let's look at the chart. RSI is broken. What happened the last time the RSI was down here? It corrected. It always does. It has to. It's the RSI. It's just how it works. Look at this one. Started down here, boom, that's a nice run. But again, we're just exploiting this little correction here. It's already beginning to flatten out. I like my odds, I like the timing, I like the positioning. Let's do it, Billy. I'm adding this one to the book right here. 3.29 exit strategy. If you get pushed out of the money, that meaning if you get this stock below 2.5 and you're pushed out of the money, get the fuck out. There's no time, no reason to hold at that point. There's too many other opportunities. Not all of these are going to hit. 85% will, but you never know which one is going to be that one that is the 15%er that doesn't work out. And you got to know when it rears its head, because if you sit there and hold it out of the money, especially with these illiquid stocks, you got to get out, and you got to get out fast. Plus, the IV on this one's a little bit high, so I don't know. I'm on the fence about this one, but I like the pricing. The pricing looks nice. The IVs, it's not too bad. I don't know this stock historically. Let's look at the next months, because this may not be the best strike. Sometimes you got to go a little bit further, like this one here. Okay, this makes a lot more sense, because look, this one we get more time all the way out till August. There is, again, it's in the money, and IV's lower by quite a bit, and the price is not that much higher. It's like barely higher at all. Let's keep going just to be safe. This one paying a little bit more for even lower IV. So this one here, considering the price point, I would say buy yourself some time here. That way, if it goes out of the money, if it takes a little bit longer, you're good, because you have that theta protection and you're in the money. But look at the price difference. This is how they get you. Most people would rather pay the $30 in hopes that it gets to 5 than pay the $115 to sit in the money underneath, that 2.5 range with that intrinsic value built in to protect against time decay. That's the most important reason why people who trade options should in fact start with level 1 options, not level 2. Everyone starts with level 2. Level 1 options is selling covered calls or writing covered calls, cash secured puts. It's utilizing your share position to generate income in different market conditions. That's what it's all about. Utilizing your options. You have more avenues of decision making that you can utilize to capture movement, protect against movement, and protect your underlying core share position. And not until you have that established should you go long on level 2 options. That is, if you want to survive long term. But that's all this is. We're just analyzing a few different things. We're looking at the chart. We're looking at the RSI. Is it underneath 30? Is it over 70? Yes. Okay, so now that we've established that, we go to the options chain. Is the IV high? And what do I mean by high? I like to say if it's anything over 120, don't touch it. There's better opportunities out there with these illiquid plays that that we've proven work. We got to stick to what works. So this one here, I don't think I'm going to actually add it. It's too close. Too close. There's too many other opportunities. We're on like page 1 of page 12 here. So we just keep looking. And really right now I like the put side. I like the put side a lot. I really do. And I like to stay above 72 for puts, because as we all know in the group, puts tend to take a little bit longer to reverse course, because for some fuck odd reason, but we've all been there. But when they do happen, if you can time it at the right time, man, puts are great. GIS, someone in the group mentioned this earlier. Let's take a look. GIS. This is literally it. I'm not doing anything fancy here. RSI just popped to oversold or overbought. Last time we can clearly see it. Reverse course, as always. It always does. The question is, let's look at the options chain. Where's the volume? We got in the money calls. We have in the money puts. We have more in the money calls, meaning more resistance at 75, 72.5, and it isn't until we get to 70 that we have more support, meaning more open interest on the put side than the call side. So this strike exceeds the put side here, calls exceed puts on 75, calls exceed puts at 72.5, calls exceed puts, no, puts exceed calls at 70. So that means max pain should be somewhere around there. And mind you, this is July 15th. And our expiration for this cycle is July 15th. If they expire earlier, like remember LI Auto, it was a little tricky one. Yeah, I mean, it was a good play, but they're not all like that. Oh, GIS. Okay, GIS. Yeah, I mean, right on the dot, 70. And that's how you do it. That's all this is, man. You go to the chart. Is the RSI broken? It is, daddy. Where? Upside or downside? Oh, upside. Okay, so we go to the options chain now, and we verify. Okay, is there more resistance going this way, or the way we would expect with the RSI being overbought, we would expect it to go down. So we want to walk down this ladder here, starting at the money, which was $75. We want to measure OI against OI. And this is extra shit that you don't really need to do. As long as it's overbought and there's volume, and you take a brief look at OI and it's laddered up on the call side, which you clearly see it is here, you just walk down the line. 6,600 is greater than 837, so you go down one. 2826 is greater than 1967, so you go down one. Oh, 3384 is less than 5703, meaning the support's at 70, meaning max pain should be around 70, which is below the current price, which we don't use max pain as a confirming factor. It's just a, it doesn't confirm. We just use it to help verify. But the only two things we just looked at was the RSI. Was it oversold or overbought? Yes, it was overbought. Okay, now that it's overbought, then what? Go to the options chain, start at the money. What's the open interest versus the volume look like? Looks good for puts. So keep that in mind. It's 4 to 70, $5 swing. If you're in the money, it's money. I mean, on a 90, 0.98% move. 0.98%. Unless this happened at the very end of the day, this is likely a false number here, this percent change. I really don't even like to keep the percent change because it's misleading a lot of the times. But yeah, this one looks good. GIS. I think it was already mentioned in the group anyway. So, but yeah, that's all it is. That's all this is. That's literally it. And if you need extra help, then turn the MACD on. If you need help timing those lows, like the way I do it, I don't use the MACD anymore because I use gaps. I use gaps as my timing mechanism. But if you don't know how to do that, then just turn the MACD on. Very simple. MACD, go down to the 3-5 minute time frame, a lower time frame when you're looking to enter, and wait for those crosses to happen on the MACD. Let's go. Let me put this in auto mode real quick. So right here, wait for the crosses. If it crosses right at the open, I mean, fuck, buy calls. And regardless, if let's say, if you sell cross to cross, it crosses here, it runs up. It crosses here. Now, it doesn't matter because if you would have held, yeah, it went up slightly more, but this period of time here, it would have basically negated diminishing returns on those gains you just made. That's what options is all about. This area here is the play right here. As soon as you start letting it get into this zone here, you're losing your gains because theta. It's drawing it out, and that's what they're betting on. They're betting on everyone here in this section of the day that bought here and hit it dead on. They're betting that they're not going to sell here at the top because they're going to want it to go up more, and then that greed is going to cost them money. Even though the price doesn't go down that much from where the top was, guarantee you those gains did not look as pretty sitting right here as they did sitting right here at the top. Between this candle here and this one way over here, big difference. That's what it's all about. That's literally it. And what I mean by gaps, I mean, they clearly hold resistance and support. Easiest method I've ever seen to chart resistance and support. And this just became a possibility like just a matter of weeks ago. And it's got to be because of this standing versus non-standing repo facility. There's a corridor set up on every chart, just like this for the most part. A lot of them on the daily, if they're illiquid like GIS, it's like it's a fucking landing pad for where they're going to end up when the RSI becomes fair value. And it's nuts to see. Now that's basically where you will become after you just do this a certain amount of time. I've been doing the same way, the same thing, the same way the whole time. The only thing that's been different is I've been optimizing it and eliminating things I don't need. Like for as this point in time, I don't need the MACD anymore. I just use the RSI and this. And I'm just sharing my findings. Let's go down to the 1 minute. I want to see if there's a gap at the top where that mofo hit today. There wasn't. Okay. But yeah, that's all this is. It's not rocket science. These motherfuckers right now in this market are in so much deep shit. If you don't think they're experimenting and theorizing and trying to figure this shit out, they are, and they're leaving mistakes that are exploitable, and that's just a fact. And take advantage of it while it's here, because it may never happen again.